Across to IG Markets in Melbourne and speak with Cam Peacock. Cam, we've got central bank expectations fueling things today. Do you think that positive mood will last through into tonight?
Yeah, good morning, Brooke. Look, it's an interesting one. Like you said, a lot of the gains we saw overnight, and we did see strong moves across the FTSE, the DAX and the CAC. They are up sort of between 1.7% 1.8%. We saw moves of a sort of 1 to 1.2% for the major US markets. But a lot of those gains were fueled on expectations that some of the recent poor economic data and the diminishing confidence might force the hands of these central banks into accommodative stimulatory type action. In Germany last night, we obviously had the ZEW economic sentiment index coming in at negative 16.9. It had been expected to be positive 3.8. That was the lowest level since 1998. That fueled some expectations that we'd obviously see another round of LTRO by the ECB. Also fueled expectations of an ECB rate cut in July. Similarly, in the UK, we had some benign inflation data fueling expectations that the Bank of England had room to move. And then, of course, as you mentioned on the open, expectations about the Fed moving with possibly more QE3, Operation Twist being extended at the very minimum. So that certainly fueled the gains last night, and we are looking at a stronger open on the back of that today. Obviously, yesterday we finished well off our lows. We finished down about 0.3% in the end, but we are calling the market up about 30 points or 0.75% higher today around that 4,150 point level. So a lot of the gains we are going to see today, at least on the open, are certainly going to be fueled on expectations of accommodative measures from the likes of the ECB and the Fed tomorrow. I think the market could, though, be setting itself up for disappointment. Obviously, QE3 has been debated at length over the last couple of weeks, and I think the market is expecting to see possibly, as I said, Operation Twist at a minimum. But if it doesn't get what it wants tomorrow, you can expect to see a lot of what we saw overnight reversed.
Yeah, OK, so how do we open today, Cam? The SPY's up by, say, 0.6%. What's the IG call this morning, though?
Yeah, at this stage we're calling the market up about 30 points, or about 0.75% up around that 4,153 point level. I think we're going to see fairly broad-based gains. If you look across the US markets performance last night, it was the materials sector leading the way. It was up about 2.3%. That talk of additional QE saw a weaker US dollar, saw higher commodity prices. We had base metals doing particularly well last night, and we've got BHP's ADR called up about 38 cents, or about 1.2%. So I think you're going to see those material stocks leading the way, but we also had the financials up 1.7%. We had energy doing fairly well, up 1.4%, with crude prices rising about 1.3%. So all those sectors which are likely to drive our market, being the materials, the financials and the energy sector, look like providing most of the points today. But again, I think investors will be fairly cautious ahead of tomorrow's FOMC meeting. I think it's going to be really interesting to see how these rallies are treated. There seems to be a lot of commentators out there suggesting that you should be selling into these rallies, so that suggests that they will be capped in the short term.
Cam Peacock, thank you so much. Appreciate it. That's